Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq, coming to you live from SmartCon in New York City. Joining me for the segment, we have Dennis O'Connell, President of the ERC-3643 Association, and we're here to discuss shaping standards for tokenized assets. It's great to have you with us. Welcome to Trade Talks.
Thank you for having me.
I
It's a
hope
pleasure
I
to be here.
pronounced that right? So ERC-3643 Association.
So easy to say.
It is. So my first question is, what's the genesis behind that name? What role does it play in shaping standards and tokenized assets?
Yeah, so the standard has a nickname. We call it T-Rex. But believe it or not, in Ethereum, as you produce new proposals, it was the 3,643rd proposal, and just happened to be what we call permission token standard. So the name originates from EIP 3643. And then so there's a token standard, which is ERC 3643. There's a nonprofit, which is the ERC 3643 Association. And then we have a DAO called T-Rex, where we have a lot of fun with the name and everything.
So let's talk about the momentum here. It's gaining recognition as an open standard for compliant tokenization. Why do you think that momentum is accelerating?
Well, it's been very deliberate. So I had almost a 20-plus year career in banking and finance. And I understood a long time the importance of standards. And so I joke with people, say, I left the bank, but the bank hasn't left me. And when I came into DeFi, I realized that there was just a huge gap for standards. And now what we're calling open standards, which is just all types of standards. ERC-3643 is very unique. It's a trailblazer because it's, as an open standard, it was originated from a community. It was then finalized and agreed. But what's different is that it transcended itself into a full financial standard. And now we've been reviewed and approved in over 23 regular jurisdictions around the world for private security issuance, including here in the US under the Project Crypto Innovation Exemption. So it's truly transcended itself.
So let's talk about the SEC Crypto Task Force meeting, which you recently participated in. What were the key themes? How did they relate to advancing open interoperable standards?
Yeah, so I would say last year I presented to the FinHub under Chairman Gensler, and it was neutrally received. And our message was simple back then, which was, we don't view any law changes. We think securities law changes are good. We have technology that meets that on a blockchain ledger. And we were really kind of frustrated that it didn't go anywhere. And a lot of our members were really even scared. Turn to today, the SEC Crypto Task Force led by Michael Seelig, who's now the CFTC nominee, which is fantastic, really set the tone of giving the industry a chance to innovate and go to market rapidly. And so technology like 3643 makes a lot of sense for the SEC because we have tenets on identity, compliance, registry, which is rules and authorization, and most importantly, control.
It's so interesting. Even when you think about financial privacy law more holistically, we're operating on regulation that's decades old.
1930s, yeah.
Right. And even, consumer financial privacy law, some of it dates back to the 70s.
Yeah.
So to your point, advancing it and allowing it to evolve, which makes sense in the digital economy, is crucial.
It's fundamental, and it's a catch-22. Blockchain, what I say, when you talk about the 1930s Securities Acts, which were done in 100 days under FDR, which is pretty amazing, and the subsequent acts we've had in banking and finance post-2008, there was never a technology that challenged that disintermediary, where you had a broker-dealer, custodian, exchange, a TA, whatever. And finally, with blockchain, we're seeing kind of a compression in roles. And the token standards are a reflection of that compression between a transfer agent or a custodian or a depository. So it's a lot for everyone to kind of understand what even is a token standard by definition. And if you actually look at the SEC's Crypto Task Force Chairman Atkins' comments, he actually, for the first time, acknowledged a token standard. The task force acknowledged the idea of conditions of compliance for them, a rubric of deciding, and then, of course, the idea that there wouldn't be just one but multiple standards out there and creating this framework. And so the catch-22 is the rules and the policies work. Obviously, we process trillions of dollars of securities every day safely. There's new technology, but who clears the gap? Who says the technology is fit for purpose? And so the innovation exemption cured that by saying, come through in a policy measure, so it's just policy, come bring your technology to the marketplace, commercialize, and then on the back of it, we'll adjudicate, what needs to be codified into law.
Yeah. So let's talk about that for a moment here. Interoperability and trusted data. It's key for tokenization.
Yeah.
Trusted data, security, compliance, key for anything in
Yeah.
the financial realm. How do technologies like Chainlink help connect those standards across the networks?
It's so fundamental. I think one of the terms I don't hear enough is regulated market data. So it's one of those things where I call elusively obvious. So what is regulated market data? This could be data you usually have to pay for. So that could be stock price feeds, KYC feeds, location inventory feeds, all these different data feeds you need to ascertain an asset that you want to put on a blockchain ledger. And when you get into DeFi, as it is, we call that permissionless, which means that there really was no control structure over most of these things, or there was bespoke control structures. And so that's very difficult for the regulator to look at and say, okay, do you guys actually have control of this asset? And generally they don't. So that's where a lot of concerns around bad actors come in. To do permission tokens where you have identity, registry, and compliance, by its nature, is very data intensive. And anyone who's worked in financial market infrastructure understands how data-intensive markets truly are, right? In fact, some of JP Morgan and Bank of New York Mellon's largest transformations in the last decade have been on data warehouse, data lakes, and be able to processing data. Well, it's no different on a ledger. And so what has held back more sophisticated DeFi has been the data infrastructure. And Chainlink, going beyond a price to Oracle, where we're providing freely available crypto prices, are now irking into that regulated market data. So technologies like ACE and CRE are fundamental. In fact, when we went to the crypto task force, we actually presented with a version of 3643 with automated compliance engine integrated, because that gave us a dynamic rule set. So not only would we have a complex data set, the data would be fresh. It would be lively and fresh. It wouldn't be arcane. And so you need those kind of data infrastructures to even begin to approach true on-chain permission architecture. That allows us to do true securities, not tokenized assets, true securities on-chain.
You know, it's so interesting, Dennis. We've been covering digital assets for nearly a decade on Trade Talks, which is kind of a long time,
Yeah.
in the media space. And every year, certain themes emerge, whether in studio or at the conferences. This is the first conference where nearly every single conversation has focused around data,
Yes.
whether it's infrastructure, governance, security, and so forth. Almost every single conversation has some element of that, which I find that fascinating. And there's a number of reasons why, largely because this space is maturing and now we're really talking about the infrastructure,
Yes.
not the use cases. And I find that highly encouraging. So when you look ahead and next steps for 3643, your engagement in the US and globally, as tokenization continues to expand, what are those next steps? What are your benchmarks? What are the milestones we should be looking for?
Yeah, absolutely. So first I want to say, because I spent so much of my career in trading infrastructure, whether it was in derivatives, capital markets at Merrill, or even collateral at Bank of New York Mellon, data was always fundamental. And so when I came into blockchain, I actually was shocked to see how much was done with such little amount of data. And I think that's always why I've had a big appreciation for Chainlink, because you can look at token open standards as the bones and data as the lifeblood, or all that. So data is fundamental, and data will continue to drive the industry forward, and we'll need a lot more transformations on that. Now, to your other point with 3643, right now, one of the biggest things with that is collateral mobility. So we see a lot of innovation on privacy. We see a lot of innovation around the transfer agent hybrid control location. People wanting to have full control location on a blockchain, on a ledger, and that requires some privacy transformations. We see a lot of transformations on datafication, or whether it's ratings, NAV, price, whatever. Even working with Chainlink CRE, my company PSG, we actually did a series of quantitative financial calculations on CRE to show that we can have much more sophisticated risk management and other sort of metrics in there. But predominantly, the biggest thing that we're seeing now is collateral mobility. Not only issuing tokens on chain and saying, okay, maybe they're a share registry, maybe they're a representative, and people buying that at face value. But what we know in the financial markets is the majority of assets are collateralized and used as credit facilities, margining, all this other stuff. And so as the data infrastructure matures in ERC-3643, we're actually announcing at SmartCon, I'm teasing, I would say, but for your audience, I'll say announced, we're actually looking to do what we call permission vaults, which is the idea of making 3643, which are actual share registries, have a vehicle to actually collateralize and provide liquidity in the form of stable coins or ERC-20s, permissionless, into DeFi. And we're seeing lots and lots of movement on collateral mobility as that datafication swells up.
Right. Dennis, I appreciate the insight. Thanks for joining us on Trade Talks.
Thanks so
And
much.
thanks for joining me from SmartCon. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.